I've waited 3 weeks for this trading setup and it's finally arrived. I'm going to be breaking down this trade setup, how I've already locked in some partial gains, more importantly, how you watching at home can find these types of setups and repeat them over and over again. I feel that is the boring part of trading for many, and this is where most fail. People are trying to reinvent the wheel, and that is not something that you have to do. The trading setups are there all the time. If you stick to the right framework and the right principles, they get repeated over and over again. It's up to you to remain disciplined on this path and also manage your risk. Let's dive straight into the video. Right guys, this was a GBP USD trade setup. Now the beauty of this trade for me was it's been in and around this range for months. It's been trading in at 127 since last year. I personally use this as my framework. I know when the market trades above, we can use 127 as a level of support. And very basically, if it trades below, I want to be using that as a level of resistance to sell into that price. If we take a look at the pound over here on the charts, we can see the fact that we have been trending to the downside of recent. We were stuck in this ugly range and we most recently broke through to the downside. Now this is where the trade for me became relevant. It was at this single moment when I knew I want to be selling rallies in the pound and I need to look for the highest price to do so. Remind yourself of that. If you're looking at a trade and you feel it's relevant, ask yourself, where is it most relevant? And you got to haggle the market. You shouldn't just take it from where it is at the exact same price that it's trading at. Ask yourself, where would it still be relevant 20 or 30 pips higher because you're looking for a better price, right? Keep that in mind. So cable, beautiful sell-off there. This is when dollar had its most recent run to the upside. We know dollar pulled back slightly and hence this correction on the pound. Now for myself, I look at this in the weekly time frame and I know that 127 remains a very, very strong level for the pair. Again, what I just mentioned was anything above 127, I want to be using as a level of support. Anything below 127, I want to be using as a level of resistance. I want to be selling into that level. Now, looking at this thing on the 4 hour, I knew my best bet in a downtrend is to sell the rally. We had this most recent sell-off in the pound. And there again, I'll stick a simple fib on and I'll know that I want to be selling the rally. I know the UK economy has entered a recession. I know the Bank of England is going to have to pivot from their hawkish policy very, very soon. I can use these things. I can add it to the framework. I don't really want to be buying this pound, right? Especially in this cross. I want to sell it, right? And because I don't want to buy it, that limits the other option that you can do, right? You can only buy and sell in this market. So eliminate those types of options. And if you remove those types of options, it's going to prevent you from taking stupid trades. Let's be honest. So cable traded into 127 last week, Thursday. So a couple of days ago now, a couple of trading days ago. We know the fact that, you know, if you just look at this since the 14th of February, right, since Valentine's Day, cable's being bought. Every single dip on cable has been bought. And with that said, cable traded into my area of 127. I had an alert, actually at the time, I had an alert at 127. Obviously got triggered. And yeah, we've been in range bound ever since. If you go ahead and look at the market there for the past 3 trading days, we haven't been able to create a new high. So what does that show you? Exhaustion. It shows you that those sellers, those buyers are really struggling and those sellers are stepping in. So I use this to my advantage and I got short on that third drive. There again, looking at the dollar index was pretty much resting at these lows of 103.75. I liked it there. I personally favor buying dollar dips. I will continue to do so. We are seeing a pullback now at the minute, which I'll cover shortly. But looking at this most recent move, and that's pretty much why I locked in gains over there. Not sure if this is loading or not, but yeah. Oops, that's really why I locked in gains there. So with that said, why did I lock in gains? Now, at the time this morning, we had a nice little sell-off. You really go ahead and you look at the pound there. The pound had largely overextended itself and squeezed itself outside of the range. When highs and lows are taken out, I have a simple rule of thumb, and that's my framework. If a low gets taken out, and a big low in this fashion, it's been stuck in the range for 3 days, lock in those gains, right? Because you're more than likely going to have that correction. So my mindset in this was, all right, I'm going to risk 30 pips on the position. If I see 60, 50, 60 pips, roughly a 2-to-1 risk reward, I'm going to take it. Right, I'm going to take it. So with that said, you can go ahead and measure the range there for a second. And you will also know that if you have a breakout to the downside anywhere into that area, anywhere into that region, pull that money back. Right, pull that money back because we may see that correction. Remember, markets are volatile. You're going to have these peaks and these troughs, but you want to be able to lock in gains. You are no good as a trader to yourself if you can't pull money out of the market. So me looking at this, I understand the fact that, all right, we've had this move lower now. If I still like this trade and this trade is still relevant to me, I'm just going to sell a rally on it. So it's exactly what I'm doing now. I'm waiting for a correction before that continuation to the downside. And the same thing there, folks. This is my framework. I know that if I want something trading lower, I'm going to keep that direction until price gets there, right? In the month of January, I was buying dollar yen, phenomenal trade. My framework was for it to trade into 150. I didn't expect it to happen that quick. So at the time I was buying dollar yen, I favored it from where it was. I like the little inverse head and shoulders that we had. Let's go back down there. I like the inverse head and shoulders that we had there. I favored buying dollar dips. Did I expect it was going to trade at 150 so quick? No, otherwise I would have, swing the position, but I didn't. I took it straight to the previous lows, expecting we could have a move lower, and price was off to the races. There's two opportunities on this to buy dips again, 144.50 and then 146. 146 came and get tapped beautifully before that continuation to the upside. I've been tracking this pair ever since, by the way, but the same thing with the pound. I have a fairly good inclination that this will trade lower. I'd like to see this trading anywhere into 124, 124.50 over the next couple of weeks, months. But with that said, it's not going to get there in a straight line, right? So use that to your advantage. And when I say use that to your advantage, build a framework around this trading lower. So what that should mean for you as a trader is you come into the market knowing well and truly that I could draw my technical setups on to look for a risk reward for this to trade lower. Whether you're trading ICT, whatever strategy you're trading, right? I know a lot of people trading ICT at the minute. Draw your technical analysis on with the framework that there's a higher probability that it's going to trade to the downside given the macro. If you're not sure about the macro, subscribe to this channel. What are you waiting for? But with that said, I still favor selling rallies on this. I like the price section of here. A price point that I have in mind, 126.75. I'd like to see that trade into 126.75. So keep that price point in mind. But folks, that was it. Small quick breakdown of the trade. More importantly, my mindset, how you can add that to your own mindset. More importantly, your framework. But by the way, I gave this trade for free in my Telegram. If you're not in it, click the link down below in the description and I'll see you on the inside. Peace out.